Mara, the miner that swore it would never sell with their full hodl strategy, just unloaded 15,000 Bitcoin to pay down debt. And the company that stepped in to grab that second place spot? 21 Capital. Jack Mallers, Tether, SoftBank, a company that was built to be on that leaderboard. So right now, it goes strategy, untouchable, almost 1 million coins, then 21. And then there's GameStop, sitting completely off the leaderboard with $9 billion in cash. Stay with me, because the math here is genuinely insane. Welcome back to BitcoinTreasuries.net. I'm Tyler, and today we are talking about one of the most interesting setups I have seen in the corporate Bitcoin Treasury space since Michael Saylor made his first purchase in August 2020. Let's start with what just happened. Mara Holdings. Between March 4th and March 25th, they sold 15,133 Bitcoin at an average price of around $65,000 a coin. They raised about $1.1 billion, which they used to repurchase approximately $1 billion in zero-coupon convertible notes at a 9% discount to par. They captured roughly $88 million in economic benefit doing it. Smart trade, honestly, if Bitcoin isn't your unit of account. But here's the consequence. Mara dropped off the top of the leaderboard, and the company that's now sitting at number 2 is 21 Capital, ticker XXI. Jack Mallers' vehicle backed by Tether's Paulo Arduino and SoftBank, which went public through its SPAC merger with Cantor back in December. They came in with 43,514 Bitcoin already on the books. 21 wasn't an accident. That company was constructed specifically to hold this position. And I'll say something else. 21, backed by Mallers with Tether's infrastructure underneath it and Strike's Bitcoin business behind it, looks a lot like a future vehicle to take Strike itself public. That's speculation on my end, but I'm watching it closely. They've been building in stealth for a while now. So the leaderboard right now is strategy, then 21, then everyone else. And sitting completely off it with $9 billion is GameStop. Before we get to the thesis, we have to clear something up, because for the past 2 months, crypto and Bitcoin Twitter have been convinced that GameStop sold its Bitcoin. They didn't. Not even close. Here's what happened. Back in late January, On-Chain Analytics flagged that GameStop had moved its entire 4,700 Bitcoin position to Coinbase Prime. That's $400-something million walking out the door, right? Crypto Twitter loses its mind, GameStop dumps, Cohen is out, Bitcoin experiment over. Well, GameStop's 10K, filed March 25th, told a completely different story. What GameStop actually did was pledge 4,709 of those coins, basically the entire stack, to Coinbase Prime as a collateral for an over-the-counter covered call strategy. They wrote short-dated call options with strike prices between 105,000 and 110,000, set to expire here late in March. The goal was income generation, collecting options premiums on an underwater position while maintaining their Bitcoin exposure. This isn't selling, this is active treasury management. Sophisticated, I might even say. The accounting required them to remove these coins from direct balance sheet treatment and record them as digital assets receivable, $368.4 million, which is what triggered all the on-chain speculation in the first place. A portion of those contracts already expired unexercised. The coins are coming back. GameStop still has its Bitcoin. Full stop. Now, let's talk about what Ryan Cohen could actually do with what he's sitting on. GameStop ended fiscal year 2025 with $9 billion in cash, cash equivalents, and marketable securities. That number almost doubled year over year, up from $4.8 billion. Ryan Cohen has been building a war chest of US dollars. The question has always been, what does he do with it? Bitcoiners have been hounding him to put it all into Bitcoin. Here's the math at today's Bitcoin price of around 66,000. If GameStop deployed $2 billion, the conservative scenario, they pick up around 30,000 Bitcoin and still have $7 billion in cash, and that moves them to Metaplanet's stratosphere on the leaderboard. If they deployed $4 billion, what I'd call the meaningful scenario, they acquire roughly 60,000 Bitcoin. They'd still have $5 billion left, and they'd be sitting at number 2 in publicly traded Bitcoin holders in the world for quite a while. The number I keep coming back to is 100,000 Bitcoin. At $66,000 a coin, that's $6.6 billion deployed. GameStop would still have $2.4 billion in cash, more than enough for operating liquidity for a company generating $3.6 billion in annual revenue. And they would be the number 2 Bitcoin treasury company in the world instantly, behind only Michael Saylor. Not in 5 years, not after an equity raise, today with cash they already have. That has never been possible for any other company. GameStop is the only publicly traded entity with Bitcoin exposure already, with the cash position to make that jump in a single decision, other than maybe Tesla, who thinks they can outperform Bitcoin in the long term with their operating business. Now, let's zoom out. Because buying Bitcoin is one thing. You can see as I move the slider, as Bitcoin price rises, it becomes harder and harder for Ryan Cohen and GameStop to acquire as many Bitcoin. Now's the time, Ryan. Buy the dip. What Saylor has built is something else entirely. Strategy recently announced $42 billion in new at-the-market capacity across MSTR's common equity and their newer preferred instrument called Stretch. STRC is what they're calling their flagship digital credit product. It's their iPhone moment. It's designed to hold a $100 peg, strip out the volatility for institutional capital that wants Bitcoin exposure without the drawdowns, and pays a monthly dividend of around 11.5%. You heard me right. If you haven't been paying attention, it pays 11.5% per month. Now, here's why this matters for GameStop. The STRC structure creates a reflexivity loop. Capital flows into Stretch. That gives strategy dry powder to buy more Bitcoin. More Bitcoin supports the MNAV premium on the stock. The higher premium supports more Stretch issuance. It's self-reinforcing. GameStop doesn't need to copy this on day one, but Ryan Cohen is not a passive operator. He has a track record of seeing capital structure plays that others miss. A digital credit product built on top of a GameStop Bitcoin Treasury with brand recognition and community loyalty that GameStop commands would be something entirely different from what even strategy has built. It would be louder, it would be messier, it would reach a completely different retail audience, and it would be massive. Here's the piece nobody is talking about, and I think it's the most important part of the whole thesis. GME shareholders and Bitcoin holders are two of the most narrative-driven, community-bonded investor bases in modern market history. GME shareholders squeezed the most powerful hedge funds in the world in 2021, not because of a DCF model, because of shared conviction, coordinated identity, and the willingness to hold through anything. They've been waiting, patiently, for Ryan Cohen to do something transformational with the cash he built. Bitcoiners are identical. 4-year cycle psychology, spiritual attachment to the asset. They amplify, they organize, they build movements around companies that signal alignment. They've done it for strategy every single week for years. A Ryan Cohen Bitcoin announcement at scale, at the dip, and with conviction would not just generate press coverage, it would fuse two of the most powerful grassroots investor communities in the world around a single narrative. That's not a marketing strategy, that's a cultural event. And the timing? Buying 60,000 to 100,000 Bitcoin at $66,000 while miners are capitulating, while the market is rattled, while everyone else is selling is exactly the kind of contrarian founding move that becomes a legend. That's what August 2020 MicroStrategy became. That's what defines a treasury company forever. Look, the window doesn't stay open forever. 21 is going to keep accumulating. Other corporate treasuries are watching every move on this leaderboard. Bitcoin doesn't consolidate at $66,000 indefinitely, and GameStop's covered call contracts are expiring right now. Those coins could be coming back onto the balance sheet clean, which means the board has a decision to make about what happens next. They could sell more covered calls on their stack. Ryan Cohen has made $9 billion in various capital raises. He has the most devoted shareholder community in the market, and he has a moment where the number 2 spot on the most important corporate Bitcoin treasury leaderboard in the world is there for the taking. The question isn't whether GameStop can do this. The math says they absolutely can. The question is whether Ryan Cohen looks at this moment right here, right now, and decides this is the move that defines his legacy. This is the reason GameStop has been building a war chest of cash. I think he should, and I think the Bitcoin community should be making some noise about it. All the data in today's video lives at bitcointreasuries.net, the definitive global leaderboard for corporate and institutional Bitcoin holdings. The link's in the description. If you're new here, subscribe. We cover every major treasury move as it happens, and we've got a roundtable every week breaking down exactly what's moving in the treasury space. I'm Tyler, and don't forget to stay orange. I'll see you Monday.